All right. Back to work tonight. I know weekend's over. Hope you guys had a fantastic weekend. But you know what time of day it is? It's time to get back to work. It's Monday evening after all. It's April 26, 2021. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background, as you can see. I got the gold, the Nasdaq, and we got the E-mini on our radar for tomorrow. Boy, lots of great setups. The buy side, the sell side. Very excited about tomorrow's trading session. My big question, though, for us, and we'll cover this tonight in the video, what do you think? New all-time highs tomorrow. You know, we got some new all-time highs, almost at those all-time highs on the E-mini, right? Very close on the S&P. Nasdaq, it looks like it's inevitable. Get some new all-time highs. I'll tell you, though, I got some pretty nice projections above those highs here. Can we get that 4,200 on the S&P? Can we get that 14,100 on the Nasdaq? How about the gold? Nice, beautiful rotation off the low today on gold. I got some pretty nice setups I'm excited for, talk about tonight, and we prep up for tomorrow's Tuesday's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, I got a lot to cover here tonight. Before we jump in, though, I just want to make sure to remind you to subscribe to our YouTube channel. Make sure you subscribe. You know, I post this video newsletter, my best trade ideas, every evening on this YouTube channel. So make sure you subscribe, hit that little bell icon so you always get notified every time I publish something new. And if you guys have any questions, don't be afraid to type those questions in. Drop those questions in the comment section for me. I'd love to answer all your questions, so don't be bashful about asking for help if you need help along the way. And if you guys enjoyed the video as much as I enjoy making it, if you tune in every evening, if you love the nightly newsletter, do me a favor, hit that like button, that thumbs up button for me. Always appreciate you guys tuning in and supporting this channel. But make sure you subscribe, hit that little bell icon so you don't miss tomorrow night's newsletter. Drop those questions if you got them. And as always, thumbs up if you guys enjoy the content here on this nightly newsletter. But enough of the intro. Time is ticking. I'm a little bit behind schedule here tonight. Let's get this thing ready for Tuesday's trading session. Now, of course, everything is pretty bullish going into tomorrow, Tuesday's trading session. We get a bull move up into a range on the S&P, pretty much a bull move up into a range on the Nasdaq. We have a bear move down on the gold, but some very interesting rotation off the low here that definitely has me looking for some buy setups as we go into Tuesday on the gold right now. You know, everything looks pretty good for the buyers right now. I'd love to buy a dip or a breakout on the S&P. Would love to buy a dip on the Nasdaq or maybe a breakout in the Nasdaq, right? Get that all-time high right overhead. Get a couple objectives I want to see met before I go buying breakouts in the Nasdaq. Would love to trade that rotation here on the gold back up around that high from last week, 1798, 1800 is an easy target there for the buyers there tomorrow. The problem is we're not quite there yet on the gold. I'm getting ahead of myself, though. Got a lot of great setups. A lot of them are long side setups here, S&P, Nasdaq, and gold for tomorrow. I will definitely touch base, though, on the sell setups. Anytime we see some all-time highs like this, we know there are potential reversals off the high here. And, of course, the bears do have control on gold, so I'll be talking about some short setups on the gold as well. And before we jump in and get our hands dirty on these, let's just make sure we're all on the same page for tomorrow. Tomorrow, of course, is a Tuesday's trading session, but we are going into one of the busier weeks here of the month of April. And you wouldn't know that by today's low volume environment. You can definitely tell the markets are anticipating something coming later on this week. Now, we are right in the thick of earnings here this week. In fact, tonight after the closing bell, we'll hear from Tesla. Tesla, don't forget, is not a Nasdaq stock. It is an S&P stock. It is one of the biggest names on the S&P. So we do have earnings reports, and of course, earnings will come out after the close. They'll come out before the open. And so if you're trading, after the close, if you're trading overnight, right, or in the pre-market, just be aware, make sure if you're trading overnight or if you're in the pre-market, make sure you check the earnings calendars. Just give a Google search and earnings calendar. You'll see it right there. Very easy to find the earnings calendar. Make sure you're not going to be walking in front of some earnings again. So overnight, right after the close, in the pre-market, lots of earnings. I think they said 180 companies on the S&P 500 are reporting earnings this week. So overnight session, pre-market is going to be a volatile part of the day. We're also hearing a lot of chatter right now about COVID cases, specifically coming out of India. I think the number was 500,000 in a day or something like that, over 1 million in a 3-day period. A very big number, right? Very big number. Now, people are getting nervous about this because we're trying to get this, this recovery back on track, get the pandemic behind us, right? And everyone's kind of watching these COVID cases starting to really spike coming out of India, and everyone's kind of holding their breath right now as far as, will those cases spread into other continents, right? Will these variants they're telling us to be scared about? Nobody really knows what's going to happen. So it's not much of a deal right now, but that is a big kind of dark cloud hanging over these markets this week. Will the markets, again, right now, it doesn't look like the markets are very worried about that, right? We get the equity markets at all-time highs. Gold has not spiked, right? So it definitely doesn't look like the markets are too worried about these climbing COVID cases, but that could change in a heartbeat, right? So we're definitely kind of watching that as it develops here this week. So those are the two big kind of overall themes this week, right? The earnings season continues overnight, right in the pre-market. COVID cases coming out of India. And then let's not forget, too, it's the end of the month, right? It's the end of the month. And as we get later on in this week, as we get closer to that 30th day of the month, it becomes the end of the week and the end of the month. That is a pressure cooker for volatility. So again, don't let today's calm price action fool you. We might be walking into a very volatile next 3 or 4 days here this week. Earnings reports, COVID cases climbing, and end of the month volatility. Now, again, a lot of this is to be determined. A lot of this is not affecting us right now, but stuff we're watching throughout the rest of the week this week. Looking forward here tomorrow on news reports tomorrow. That is known news reports. Again, big news overnight from earnings, pre-market earnings. Tomorrow, though, we get, of course, the beginning of the FOMC meeting. That'll be announced on Wednesday. That won't affect us too badly tomorrow. There's not a lot of news on the schedule for tomorrow. I get the home price number at 9 o'clock. And that consumer confidence number at 10 o'clock. Honestly, the home price number is probably not going to be that big of a market-moving event. As we talked about last week on this newsletter, we saw new home sales, existing home sales absolutely crush their numbers last week. So we don't expect this to be anything disappointing. I don't think anybody will be caught off guard by a double-digit climb in the home prices index because of lockdown period, right? So that's not going to surprise anybody. What we're definitely looking forward to, though, is that consumer confidence number at 10 o'clock Eastern time. A lot of people looking for blowout numbers right now as a sign of a potential recession coming, right? When consumer confidence numbers have been really high for a long time, usually that does signal a top in the market. I'll be looking for the big reaction after that news comes out tomorrow at 10 o'clock Eastern time. If I had to guess tomorrow morning, the best trades, that 10 o'clock to 11 o'clock block in the wake of that consumer confidence number. If you could only be at your desk for an hour tomorrow, that would definitely be when I would make sure you could be there. Now, of course, we'll be at our desk tomorrow and every morning at 8 o'clock Eastern time, and we'll trade all this stuff together. So don't wait till 10 o'clock to get to your desk, but if you could only be there for an hour, that 10 o'clock to 11 o'clock block would certainly be on my priorities list for tomorrow. And again, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. I'll put all the membership information you guys need, the description of this video. There's a lot of news this week, though, right? You got of course, the big FOMC announcement is on Wednesday. We got GDP and jobs on Thursday, and a big end of the week employment cost index and personal income. So we have no shortage of major news here. Tomorrow is really probably the day with the least amount of major news before we go into Fed Day on Wednesday, GDP on Thursday, and inflation reports on Friday. End of the month, COVID cases climbing, say that 10 times fast, and of course earnings season. That is what's on our radar as we go into this last big, almost fifth week, right, of the month of April. Let's go back to our charts, though. Don't mean to waste too much time on the calendar, but I did want to make sure you guys know all the moving pieces that we're dealing with here this week. Got the S&P, got the Nasdaq, and of course got the gold here. Everything, like I said earlier, is looking nice and bullish right now, including including the gold market. We'll talk about that in a moment. Let's go to the S&P first tonight. S&P is a relatively simple, straightforward chart here. It's a bull market, right? It's into a trading range. Anytime I have a trading range environment, I know that the range itself will act as a magnet. Now, if I had it my way, there are kind of three basic patterns I would look for tomorrow. My three favorite setups as we're going for tomorrow. The first one's going to be a pullback into my support areas, followed by a seller failure pattern off the moving average to be buying back up. It's a range-bound market. It's got a bull bias to it. I'd love to use a failure pattern underneath that trading range around areas of support below that range, right? That would be my first favorite entry pattern for tomorrow. My second one would be a 1, 2, 3 breakout, a strong move up, a pullback to the moving average, and a strong jump off the moving average. If I can get that 1, 2, 3 breakout, then what I can do is I can draw the trend line off the highs, draw the trend line off the lows, and I can look to buy the first pullback off the low of that new hidden channel, right? That new channel. Now, where do we think these buyers are trying to go if we do get this breakout? I've got a big round number at 4,200, but more importantly, I have a beautiful pendulum swing up there at 42.07.5, which I'll talk about in just a few moments. The third and final kind of favorite setup here for tomorrow, as I mentioned earlier, we have not taken out those all-time highs. A third and final favorite trade setup for tomorrow would be a reversal off of this high. Take off the highs, buyers try once, buyers try twice, mark up that low, mark up that high, and sell that sucker back down into that trading range. This is a variation of a failure pattern. The most important thing is we want to incorporate major resistance, right, which is the all-time high right now. We also want to let the buyers try a couple times because, of course, they have control of momentum. If I can get buyers to try a couple times here, and I can find some resistance overhead, maybe it's a swing high, a trap high off that trend line, I would love to grab that, what I call a nested failure, and run this thing back down, probably down to those lows, right, around that 41.64 even area. So those are the three favorite setups I would hope I could get my hands on for tomorrow. And don't forget, all three of these setups, right, the failure patterns, right, the breakout patterns, and the reversal patterns. I cover all three of those setups in a lot more detail in our free trading classes here at School of Trade. If you have not grabbed that course yet, you definitely owe it to yourself or your P&L, I guess, right, to grab that free course in the upper right-hand corner. I'll go over a lot more details of all my favorite patterns, right, my failure setups, my reversal setups, my breakout setups. I go over a lot more real examples of those in that free trading course, right? So grab the little link that pops up there in the upper right-hand corner and get that deep dive into all of these entry setups, right? I'm not going to go over all of them here for you tonight, but I will go into more detail in that free course if you want to learn more. Next up, let's go zoom back a little bit. Let me show you kind of where we are here right now. Now that you kind of know what I'd like to accomplish here, you can kind of see my rationale on this here tonight. Now, of course, if you recall, we came out of that big move up, right? Last week, we had that big drop on Thursday, right? And it looked like the buyers were beat at that point, but after they tried once, twice, they ran back higher. There's a nested failure, nested reversal, right? Just in the opposite direction there. The buyers, of course, take it with that huge run up, that big runaway move on Friday. And now the buyers are ultimately trying to retest those highs here right now, right? Very bull market. There's definitely no doubt about that. You'll notice though what I did. I took the amount below that trading range. I put it up above the high of that range. And that's what's giving me that pendulum swing up there at 42.07.5. That's a really juicy target for those buyers, right? And it's always nice to use those pendulum swings because we're at all-time highs, there's not a lot that I can do up here, right? I mean, I could try to go for a measured move, but that measured move will be so insanely large, though. I would rather use that pendulum swing, 42.07, half up there. So that's where I get those areas. My biggest concern is just the fact that A, we have a range right here, and ranges, of course, act like magnets, and B, we get that all-time high, right? That's a major area of resistance. So I'm very much hesitant right now to buy too aggressively here. Now, again, I'd love to see us pull back, right? Get down into some of these support areas down here. I'd love to see the bears come in, try to get short, right, on that pullback. And then once I see them get short down here, we know exactly where their stops are, and we can use those stop losses basically as fuel, right? We can buy into those stops for a short squeeze, right? Or a short covering rally, if you will, right? We go down, we come up, and we buy into those stops. Now, if we're lucky, we'll get a follow-up trade with a failure into pullback combination, right? Failure pattern into pullback combination. Now, again, I'm going to go over a lot more details of this particular combination setup. I'll cover more details in that free trading course, right? They're linked up in the upper right-hand corner. But that's the general idea here to be a buyer. The next thing would be if we can get that one strong move to pull back to the moving average, right? If I can get this 1, 2, 3 go, mark up that high, mark up that low, and look for that first test off that low. Now, I'm not just simply buying the pullback off of that low. I can look for a pullback, but usually what will happen when you get those hidden channels is you'll see a combination of bear traps, failures, then into pullbacks off of the low of that, right, of that channel. What'll happen is oftentimes is you'll get the market as it goes higher. You'll draw that channel right across the high off the low, and then look for that little trap, right? It'll be a trap into a failure into a pullback combination. A very, very consistent setup, right? Trap, failure, pullback, strength. Again, I go over all of these individual setups, right, in a lot more detail in that free trading course. But that's the idea of what I'd like to get into as the market rolls higher here. And then again, the third thing is, right, the third one would be if they do run this thing higher and the buyers cannot break it out, right? The buyers can't break it out. They try once, they try twice, right? We're at a major turning point. The buyers have all the control, so we've got to give them the benefit of the doubt. Let them try once, let them try twice. Again, I like to go out, draw a trend line off those off the lows, off that high, and look for that short, right, off the high. Just remember though, don't force this thing short. Really make sure you wait for the 1, wait for the 2, make sure it combines that major level of resistance. That's going to be the key. Combine that with a nice sell signal off the high, and you've got yourself a really nice reversal setup off of that high here. Now, at the same time, the market may pull back here, right? We may end up holding that pullback off the moving average and blasting lower. That would also be a reversal, right? Like this one, right? Strong move down, pull back. If they would have taken that with some strength off that moving average, that would be a 1, 2, 3 reversal pattern. In this situation, if I can get the pullback, get into an area I'd like to buy, see those bears coming in and getting short off that and really actually stick the landing, right? If they can stick it and hold it coming off that low, I can mark up that low, I can mark up that high, and I'm looking for that first test, right? The first pullback off the high of that channel. And again, I'm not just simply blindly selling it. I'm looking for things like bull traps, buyer failure patterns above the moving average, right? And then pullback, right? Continuations as we come on the way lower here. And again, the objective, right, for those bears, boy, get a big trend line down here. That'd be an easy spot for the bears to hit tomorrow if they can take control. And I would imagine the bears would love to get down in this area here, right? At that big range from last week. So 41.25, 41.20. It seems like a little bit too much to kind of bite off for tomorrow for the bears. But hey, things can change quickly. Like I mentioned, we get some earnings reports, the kind of nervousness about these COVID cases. There definitely is a lot that could happen here overnight. So we shall see. You know my favorite ways to trade it for tomorrow. Hopefully I'll see you there with us tomorrow morning at the opening bell in the trade room. And and we can do it all together. Let's keep going, shall we? How about some Nasdaq? Nasdaq is as well very bullish here right now. Quite a different scenario though on the Nasdaq here. Now, we're definitely bullish. It looks like we're starting to go a bit sideways here, maybe right around this 14,000 big round number. I've got the all-time high just overhead, just shy of that 14,060. And I've got another level up top there, 14,175 and a quarter. We'll grab a look at that in a moment. My favorite setups, my three favorites here for tomorrow. The first one will be a shallow pullback trap, right? I've got this little... It's almost like a range right here, but in all reality, it's kind of like a prior swing, right? So this whole area right there, this area could easily be, right, a two-try trap here. That's one of my favorite setups here for tomorrow, right? So a trap below that low. Now be aware. If we were to go up here a little bit further, right, and get that all-time high and then pull back, that's not the same setup, all right? Just be aware of that, all right? I want to see this thing up, Again, we know the support here. I want to see us get up. Shallow pullback, higher high in price. That is one of my favorite entry setups here for tomorrow, right? Is that trap. Again, needs to happen before we reach that all-time high right now. There's one, right? Second favorite entry setup would be a deeper pullback. You'll notice I've marked up this high. I've marked up this low. This would be a great spot to get long because you'll notice that 13,938 is a prior swing high back here. Okay, so that's a really nice, tasty level of support. And if I can get lucky and combine that support level with the low of this new channel, yeah, now we're talking, right? That's a really nice looking spot there. So again, I got the 938 level. I got the low of this channel area. What I'd like to do is get that pullback. Again, get these bears to come in and foolishly think this market is reversing. Once they get short off the moving average, now you know exactly where their stops are. Look for that failure into pullback combination for that rally, right, going higher. Failure pattern into pullback pattern, right, combination. And remember, too, we want to combine those right off of right support. All right. So failure into pullback combination. Third setup here as we go, and maybe I'll add a bonus setup here as we can go here. The all-time high, right? It's not just the all-time high, that 052 area. You could definitely tell there's going to be some, false tops up here. The all-time high is just kind of the official high, but there's probably a lot of, again, resistance levels here. You can probably think about a whole zone, right, of resistance up here somewhere, right? So it's not exactly just the, 59.5 high here, but that's kind of the big level. How do we trade this thing as it goes higher here? A breakout, basically, right? We'd have to wait for them to take out the all-time highs, hold that pullback, right, and then jump off the moving average. Okay, 1, 2, 1, 2, 3 breakout pattern, we call them, right? 1, 2, 3 breakout. I'm going to mark up that high. I'm going to mark up that low. And I want to buy that first pullback, right, off of that low. Now remember, right, those pullbacks, don't take the word pullback too literally, right? So think of it like off the high, off the low, mark that swing right there. This is where the good stuff is, right? So again, you want to buy the first pullback or the first test of the low of that channel. These are oftentimes failure into pullback combinations, right? So trap low, right? Trap low, failure pattern, pullback pattern, strength move. I'll go over more of the small details of that in the free trading course, right? Linked up in the upper right-hand corner. Or obviously we'll cover that tomorrow morning in the trade room while we're watching it all develop here. That would be the third of my kind of top three setups here for tomorrow. At the same time, I'd be naive to think I couldn't short off this all-time high. The only problem is that we're very bullish, right? So I can't just simply try to get short off the high. What'll happen is you'll get stuff like this, right? You'll get this strong run up. You'll get what appears to be this massive reversal candle, but all it is just the buyers getting into lower price. So I don't want to try to force this trade short, but if I can find myself up at these all-time highs, if I can get these buyers to struggle, right? And again, when I say struggle, I mean give them a couple shots, right? Let them try once, pull back. Let them try twice, right? Mark up that low, mark up that high. There's a lot of different ways you can take this trade. My favorite way to do it is a trap above that high. We're not going to get that trap every single time though, right? That'd be my favorite way to do it. Another easy way to do it, right, is to sell off the top of that channel. Right? Another way to do it. I always try to incorporate these reversal trades, right, with some level of resistance. Okay, that's kind of the most important part of this. Once we take the highs out, the buyers try a few times, and we're looking for that, again, that resistance level to combine. Once you see that nice, fat, juicy signal candle there, all the buyers who are in, they will not be in very long. They will cut themselves loose, they'll liquidate their longs, and the market will oftentimes swing back in the opposite direction. Now, where do we think these bears may take this thing? Possibly all the way back to the weekend gap. Now, the weekend gap, we had one on the S&P as well. What exactly is a weekend gap? A weekend gap is the closing price. Well, weekend gaps are kind of my way of describing when the closing price from Friday and the opening price on Sunday evening. If you recall, these markets are all electronic. They open up on Sunday evening, right? Every evening, 6 p.m. Eastern time, and they trade all the way through the following day. So that's the closing price, the difference between the closing price on Friday and the opening price on Sunday. If you can see daylight in between them, sometimes they're very close. But in this example, you'll notice they close on Friday at 9:03 half. They open up on Sunday, right? Whatever it is, right? Around that 920 area. They did get the gap filled, right? I want to make that very clear. The gap definitely has been filled, but that will act as a magnet, right? Those weekend gaps will act as price magnets really for the rest of the week. And you'll be surprised how often those weekend gaps will keep on being retested over and over again. So if we can get that short off the high, then I would imagine that weekend gap, right, will definitely be on our radar for an objective going lower. Also, too, if we were to get a deep pullback, I'd like to be a buyer here with a seller failure. However, if these bears, if they can hold that pullback and jump, right, and they can get that 1, 2, 3 reversal, now all of that momentum changing hands, I definitely want to look for that first pullback off the high of that channel, right, that 1, 2, 3 reversal pattern. 1, 2. Again, I'm not trying to sell the first one, but I'll gladly look for those bull traps, those buyer failures, right? Those pullback combinations. I'd love to get a short signal off the high of that channel. And again, I go over all my favorite signals, right? My entry signals, my entry triggers. I go over all those inside that free trading course linked up in the upper right-hand corner. Now, where do we think the bears are going in this situation, though? Right? If the bears can get this reversal, where are they trying to go? Right? They're probably trying to go back, right, down to that range from last week, right? Get a big juicy range down there. That's where those bears want to get to. Okay, it does seem a little bit ridiculous here right now, but again, a lot can change here in the overnight, especially with earnings coming out. Right? As we go higher here, we know we have the all-time high above us. You'll notice, though, what I've done. I've taken the amount of that big drop that we saw on Wednesday last week, and I simply doubled it up. In fact, that's what I call those. I call these double ups, right? I simply take that, right, whatever the big move down was, and I project it going higher. That gives me that 14,175 and a quarter area. It's a really nice target if we can break and hold above those all-time highs. So guys, you get a pretty good idea now of how I would like to trade for tomorrow. All we need here is a little more candlesticks, and hopefully I'll see you tomorrow morning at the opening bell, 8 o'clock Eastern time in our trade room, and we can trade this stuff together. Let's keep going, right? Nasdaq is looking pretty good. S&P is all ready. How about some gold? Now, I alluded to the gold, right, a little bit in the introduction, that gold might be a bit of a curveball here for tomorrow. Let's take a look at this. Very interesting scenario right now on the gold. The most important piece of the gold chart is we have that strong move down to finish off last Friday, right? That was last week's kind of finishing move there. Anytime we see a real strong move in one direction, we always know there's a good chance they're going to get a two-legged pullback and a retest of that low. We call these open loops, right? Strong move down, leaves an open loop at that low, and it wants to be closed. That's a really big part of this because you'll notice what happened. The minute they took out those lows, buyers came in and just ripped this thing running higher. Okay, so the first big clue in this chart is the Bears basically got what they wanted, right? They completed their objective, as we always say. Big run down, they get the pullback, they retest the low, and they clearly take their profit. Okay, so kind of keep that in mind, right? It looks like the Bears have kind of finished off what they wanted. Now, let's go back and look at a bigger picture here. Because if you recall from last week, right, we had that big move up into that range, right? And there's this range, right? Right there, right? So what are ranges? Ranges, of course, are magnets, right? When we go underneath a trading range like this, we oftentimes see the bears try once, the bears try twice, and then a big pendulum swing back in the other direction. Remember, ranges are balanced areas. So imagine there's a pendulum right in the middle. The pendulum swings down. It's not just going to go right in the middle, right? It's going to keep on going all the way to the other side of this range. In fact, you could say, right, that this big move down, that big move up, right, that is a very easy projection for these buyers. Now, I think for right now, that high up there, right, those highs at, just shy of 1,800 are a very, very easy target here now for these bulls, right? So I really like the buy side here on this gold for a few reasons. Again, the first reason is I think these bears kind of got what they wanted, right? They finished off their job, so to speak. Now, we see this rotation going higher here, this rotation off the low of a new trading range. And we're kind of anticipating now that pendulum swing back in the other direction. Okay, those are kind of the two big reasons why I like the idea of being a buyer. Now, you may also recognize we haven't quite turned the corner yet. We haven't seen that 1, 2, 3 reversal, right? We just haven't seen it yet. So we're definitely not a bull market right now, but there's a lot of signs. There's a lot of signs right now that we definitely may soon be a bull market. I love range-bound markets. Range-bound markets are by far one of my favorite conditions to trade. They weren't always my favorite, but these days I really have grown to love range-bound markets because the strategy is very easy. One thing about ranges is that ranges act like magnets. And again, think about that pendulum. Okay, look what happened back here. We get that strong run lower. And as the market rotates higher now, I've got this pendulum swing going higher here. Okay, that pendulum swing, but by the time we get to that pendulum swing, this is going to be firing on all cylinders. And that's a really big part of this. Again, I've talked about why I think the market is poised for a run going higher. If we can get a little bit more movement here going higher here, right, that would really be, again, by the time we get to the pendulum swing up here, I think these buyers are ripping, right, as this thing goes higher here. Now, they may not. Again, I want to be ready for everything here tomorrow, but that's kind of what I'd like to see here as we go. Now, let's talk about, now that you know kind of my long-winded of rationale behind this right now, I wanted to make sure I kind of gave you a breakdown of it. The Eminis are easy. We're bullish, we're all-time highs. The S&P and the Nasdaq are relatively straightforward. Gold is a little more complicated, as you can see here. And remember, too, we get the FOMC on Wednesday. So there's going to be a little bit. Don't be surprised if gold is the more difficult price action this week just because of FOMC on Wednesday. Once we get through FOMC, gold should be back to its normal kind of peppy self here. But long story short, where are my three favorite setups? My three favorite setups here, what I would love to get, my favorite one right now would be a 1-2 go into a 2-try trap. That would be kind of my favorite here as we go. So imagine now we take out that pendulum swing. We get a shallow pullback, a higher high in price. What I'd love to do is get this thing to trap right off of that low, or buy the low of that new channel, right? That would be one of my favorite setups here for tomorrow, right? So again, get it, take out that pendulum swing, give me a shallow pullback, a higher high in price, right? Buy that trap low. Beautiful, beautiful setup. Again, I do realize we will be up at areas of resistance, which is why I want that trap low, right? That trap will help me to avoid any problems with buying high. At the same time, right? If the market was to just rip and run higher here, right? Just blows right through that pendulum swing. Well, now there's no problems, right? Now I can mark up that high, I can mark up that low, and I want that again. It'd be a a failure pattern into a pullback pattern combination, right? I cover these in a lot more detail in that free trading course, right? Linked up in the upper right-hand corner. But that would be, right, again, kind of the same idea there, right? As the market runs higher, I'm trying to find that new channel, right, as these bulls take off for that run going back up to that 1800 area. Okay. Second thing would be, right, what if we run lower here? Okay, this would be another great setup. In fact, I wouldn't mind this one at all. Let's say, for example, we don't see this move going higher, right? We take off, make a run down to those lows. Okay, this range is still there, by the way. That range still acts as a magnet. If they take out those lows, right, take the low out, trend line support down here. There's a lot of support down here. Okay, can I buy down here? I definitely can. What's my problem though? Momentum. So because of that, my second favorite setup would be what I call a nested failure. One try for the bears, two try for the bears. Now in this situation, once those bears try twice, those stop losses are sitting right above those highs. You've got the range overhead acting as a magnet. You're coming off of support, right off of that low. Yes, it is a very bear environment, which is why you wait for the bears to try twice. I got a bunch of different options on this. I can draw a trend line, right, across that high, off that low, and buy that trend line. I can look for a trap below the low, right? Trap setup, right? Trend line buy. Or I can buy right into those stop losses for that market to rally back up again. Again, lots of different kind of ways you can use these nested failures. You could see a dozen of these trades and have a dozen different variations of how that setup looks. Again, I cover the smaller details of this stuff in that free course. Okay, that's my second favorite setup, be buying off of that low. The third one is going to be a short. The third one is we do take out that pendulum swing, right? We do take out those highs. But now, instead of the buyers ripping this thing going higher here now the buyers struggle. Right? They see a lower high, a lower low, a lower high. We mark up those lows, we mark up those highs, and we're getting short, right? Going back down into that trading range. Now remember, if we can get a pendulum swing going higher, we can probably get a pendulum swing going lower, right? So take some profit off at the low of that range and take some more off on the pendulum swing to close out the position on the other side. That's right. Those are some of the key components here that I would love to see here tomorrow. One of those kind of top three setups here on the gold. One thing about gold, it's not going to be easy to sell short below this trading range down here. This area down here, if you look left, to be honest with you, unless we really see a lot of strength going lower, this whole area right here, if you look left, this is a major top, right? And overall, a very bull market overall, right? Look at a 4-hour chart of gold, and it's not very bearish right now. So if we do end up going lower, you've got this level, trend line there. That's why I said, if it does go lower, yes, I do realize it's very bearish at that point, but I'm not afraid of the momentum as long as I give them the benefit of the doubt. And remember too, if you're able to buy, right? If you're able to trap in those bears, right? If we're able to take those lows out and then 1, 2. There is all that risk reward is just jacked, right? That's awesome. So that will be a very desirable trade down there. Again, if we do take out those lows, get those bears, right? 1, 2, stops are hit. This is a very desirable area here for buyers. Yes, again, it's bearish, which is why we're going to wait for them to try twice. But this could easily end up ripping very quickly back up into that trading range. And that's why it's on my list here for tomorrow. So what are we going to get? Are we going to get a pullback? Is it going to break higher here? Either way, you guys are ready for it. Right? Either way, we are locked and loaded here for the gold, the Nasdaq, and the S&P. All we need now is a little bit more time overnight. Get a few more candlesticks. Again, we've got some earnings coming out here from Tesla overnight, so be careful if you're overnight trading here or in the pre-market for tomorrow. We're not going to worry about FOMC until on Wednesday, so no worries about that. Again, I think the big cloud over these markets this week is going to be those COVID cases. Right now, it's a nothing burger. Right now, it's not an issue, but we could start seeing that start to gain some traction as we go into later on this week. I will keep you guys informed on everything I see. And again, don't forget, come out and do this with me tomorrow in our trade room. It is super easy to get started. I'll put all the membership links you guys need in the description of this YouTube video. So grab that link in the description, get registered, and I'll see you tomorrow morning at the opening bell. If you're not on the YouTube channel right now, there's a big button for you right below this video on our trading blog. Hit that big red button, grab your advanced membership, and I'll see you tomorrow morning at the opening bell. If you have any questions, don't be afraid to drop those questions in the comment section or pick up the phone and give us a call here in the office. I would love to answer all of your questions. Don't be afraid to call the office. We've also got live chat on the left. I got live chat on the right. I would always love to hear from you. Don't be a stranger out there. All right, guys. Hope you learned a lot from tonight's video. Hope you subscribe to our YouTube channel. Maybe a thumbs up or two here along the way. And, of course, hope I'll see you tomorrow morning in the trade room as a brand new member. If not, I'll be back tomorrow, right? Same time, same place tomorrow night. Have a great day. If I don't see you guys tomorrow morning in the trade room, have a wonderful tomorrow, and we'll see you guys next time. Adios, amigos. Bye-bye for now.